Welcome back to the only Bitcoin trading analysis you're ever going to need. We've got our blueprint up for the entire range here, guys. We've been working off of this since last year. So I've given you guys the days and times when these were going to go ahead and reverse all the way down to the exact day of our infamous Gartley here that I was able to call all the way from over here. It's not about being right or being first here, guys. What it is about is having a plan and executing. So the best trade up here was going to be a short. Main reason being there is just so much there. We were looking at that level even before that pattern had appeared, primarily because it is a statistical pattern, right? So this is a very high time frame average. And then we do also have the POC for all the price action comes in here. So this is just an absolutely massive level that you have to get back above. So 47,707 still remains the best, the most indicative level of what we're going to do in the near future, right? So we cannot be macro bullish until we're above 47,707, just as I've been saying all the way since the first of the year to now, all right? So that level needs to remain in your minds at all times, and just know that if we are underneath that level, it is not necessarily a death sentence, but we do want to be living above it, and once we are, I do think we have some really nice moves ahead of us, and we can start to look forward to higher prices. I mean, that's really it. And those targets of like 56,944, 58,822, $63,000, all that stuff, those can all happen. They're not worth discussing though until those conditions are met. We do have fib time coming in. Realistically, I've got quite a few days for this coming in, to be honest with you guys. We do have some coming in just before it. So I'm really looking at this as a zone. I've mentioned that for several weeks now in the group. So if you're in there, you guys know that I do have fib time coming in for the second week of April. We've been talking about that for a better part of the year as well. But in terms of the targets for what we were looking for on this, right? So you did have these targets here. I believe we were looking at it right here. This is target one, mainly because you are always using the B leg, right? So you're looking for the B leg right here. And I had basically tidied this box up because I didn't want it to be so wide. Because there was a single print there that was leading us from 45,000 all the way down to like 44. Now you see that we found our way back in. So where do we go from here is kind of it's an important time on the chart, in my opinion, because, well, you've done some things that you really don't want to be doing. You can see that you're living on the 0.5 right now. This is actually the box that I had marked out on the second. I marked this box out. Wasn't really looking for the one-to-one to provide too much support. And what I mean by that is this right here. I'll show you guys that. It's on my Twitter. All right, so on the old Twitter, this was from the weekend, basically showing you guys the previous week high was resistance here, okay? And we were looking for a channel. Everybody was looking for this as a triangle. I think that was a really large mistake. And you can see just how well respected this is. And we come down to the 1-1 for the bounce. Now, comments to the people that are in the group anyways, I just told them I'd expect a bounce here. Realistically, I'm not looking to take that bounce because it's not going to do anything unless we get back about 44,800. Coming back to the chart here, what you are going to notice is that you've come all the way back into an old range. This is not good, guys. That is not something that you really want to see. So don't make light of that type of a movement, especially when you've come into such a high time frame level like this and gotten a rejection. You can get quite a sell-off off of those, and there are quite a few longs that are trapped up here to fuel a further downside. So just be cautious, mainly because as we look at everything, we go through all of our ranges, right? So we start looking at things. We can actually see that, well, we're inside the middle of a range. We're not anywhere near actual support, in my opinion. These are all my opinions, guys, not financial advice at all. I'm just some guy on the internet with a TradingView account, and I do okay. I do okay, right? So when we look at things here, we can see that we are just inside of ranges here. We are filling in some inefficiencies, which I will go ahead and update here. This was the inefficiencies we're looking for. We've already hit one, so one of those targets is now being hit. Those were given on the 2nd of April, and we are still looking for further more potentially. It just is what it is. So this is the first level of actual support that we could be looking into, and we could be looking down from here. So it is one of those things where when you look at this on the high time frames, especially, we start looking at the merged ranges, TPO data. This isn't the place to be looking for longs, really. There's just not much here. You really don't, the highest probability long is not here. Let's put it that way. I think that sums it up best. So for me, I'm looking at this overall as just saying, I had mentioned it in the last video. I said, well, this says we can go much, much lower, and we got the reaction off of this pattern, if you guys recall. I do mention that we can go much lower, and well, we are seeing that. So we do need to make sure we're being judicious with how we are, quote unquote, buying the dip, because price did not do anything on a macro scale to confirm that this is going to be going higher. That's just the fact of the matter. So as we apply the same theories to high time frame, ranges here, you can see that this is our level we were on about right here, right around 47.7. Let's go back in history. This one's untapped, so keep that in mind. But these are just high time frame averages. You can see how important they are, right? So this is going all the way back to 2019. I was trading this. Get back above it. What do? You pump. Resistance, go to the lows, right? Lose this level. Where do you go? Down. Hold the level again. Nice, right? What ended the bull market? Right here. Boom. All the way up into that level. We can go further back in time. Launch pad. Didn't even touch it. That's not bullish, but it's definitely not bearish. It's not bearish inherently, but it's not bullish either. You can see that you're underneath it. You do make new lows before coming up, never actually challenging it before setting in a new one, right? And then again right here. So this is going to be one of those things where when we go back to the price and we look at this, like, we really do need to be living above this level. If we start losing and breaking down from some of these levels right here, guys, it's going to look bad. It's going to look like you can come all the way back down to the low of the range potentially, which is $37,000, $38,000. If you lose that level, I do anticipate taking these lows at that point. I would just anticipate doing it. I would keep these boxes that I had on my chart. The first one was here. This was the bounce zone, right? Very, very well respected. You start losing this level though, I fully would anticipate that this box right here, while support, would eventually break, and we would get to see some of my doomsday targets down here. And I would be looking forward to them because, again, you have to take the best trades, and the best trades at that time would be to the downside, and I'd be looking down into this region. Now, that is getting way ahead of ourselves. I'm just kind of painting a picture for you guys on the importance of some of these levels. You do have to trade them level to level. I am fairly bullish for the short term until we start losing certain levels that do give us, cause for concern, so to speak. So until there is cause for concern, I remain in this stance that this is an uptrend. I am still holding longs from down here. I have taken some profits. I've also gone ahead and taken some shorts in this region, or at least sold and taken some profit, and I'm really sticking more to scalping until I get more of a general market, because if we do break this level definitively, then yeah, absolutely. Not only am I going to reap the benefit of those longs, but I can open new positions or ladder in on the strength and target the upper areas on the chart that we've been talking about, which for me do come in all the way up here around $57,000 and then 63,550, 63,900, right? So we know that we've got support down here between 42 and 41.3. I hope you guys found this video useful. If you did, do me a favor, follow, like, comment, share. I will be putting together some free classes in the Discord for the general public. Obviously, that we do a couple live streams a week, plus have an academy for those that want to learn how to use these tools, learn order flow. The link to the Discord is in the bio. And as always, if you guys are looking for a great exchange with no KYC, I always plug Bybit. That is my preferred exchange. The link for a bonus that does support the channel is in the bio as well. And I hope you guys have a fantastic Wednesday and a fantastic rest of your week.